Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip looks at Fannie Mae and Freddie Mac and the narrowing of credit spreads. Yesterday, rumors were flying around that the U.S. Treasury would soon announce a bailout plan for Fannie Mae and Freddie Mac. Shares tumbled to levels not seen in 18 years. Under a bailout, it is assumed that the owners of Fannie and Freddie stock would be left with no equity and that the debt would be given a bid by U.S. government in some way. Fannie Mae was a $70 stock a year ago as a potential savior of the mortgage market. Now it's below $4 a share, approaching sayonara. Freddie Mac has declined from $65 per share to $3.25. Both Fannie and Freddie have been raising cash through debt issuance, and spreads narrowed yesterday. The Fannie Mae 5-year ended Wednesday at 88 basis points above Treasuries, down from 100, and the Fannie Mae 10-year was 71 above, down from 81. A pending problem is that the two have $225 billion in debt due at the end of September. Foreign central banks are reducing their holdings and will likely offer reduced buying interest moving forward. The U.S. Treasury will have unlimited backstop capability through the housing bill, but this bill does not become law until October the 1st. If they implement an earlier bailout plan, why do we need the stupid housing bill in the first place? My second blip looks at the FDIC plan to restructure IndeMac Federal defaulting mortgages. My question is whether or not FDIC Chair Sheila Bair has the authority to use FDIC funds in the manner within which this plan provides. The plan keeps a homeowner in their home using loan modifications that take a mortgage to a 38% debt-to-income ratio. This will be done through a combination of interest rate reductions, extended amortization, and principal forbearance. Interest rate reductions may be below the current Freddie Mac survey rate for up to 5 years. I assume the FDIC will soon have to ask Congress for an increase to the FDIC guarantee pool, which will be another bill for U.S. taxpayers. Where do I sign up for this giveaway? My third blip explains why my plan is better. I say repeal the housing bill and let Fannie and Freddie live or let die. We nationalize the mortgage market through a national mortgage bank funded by U.S. Treasuries, which are backed by the full faith and credit of the U.S. government. This would create pools of mortgage money at 100 basis points above U.S. Treasuries, at 3.75 for a 2-year mortgage, 4.375 for a 5-year mortgage, 5% for a 10-year mortgage, 5.5% for a 30-year mortgage based upon their last auctions. Every citizen would have eligible for the plan if they qualify with full documentation, a 20% down payment, and at least a 35% debt-to-income ratio. I would also let a home buyer use his retirement funds to pay for a home without withdrawal penalties. The homeowner would have to have its income directly deposited into the servicing bank for automatic mortgage payments and ongoing income verification. Any securitization would be done through the Ginnie Mae mortgage program, which has interest and principal payments guaranteed by the U.S. government. Is this too simple for lawmakers to understand? My fourth blip describes why a recession cannot be avoided. Between 1988 and 1992, FDIC total assets declined 4.2%, with construction and development loans down 54.7%. This gave the U.S. economy 2 consecutive negative quarterly GDP in Q4 1990 and Q1 1991. At the end of Q1 2008, total assets exceeded the 1992 level nearly threefold at $13.4 trillion. All loan categories are huge in current dollars, and only one has started to decline. That's 1 to 4 family residential mortgages. They declined to $2.215 trillion, down 1.2% sequentially. I am concerned about 5 loan categories: credit cards, home equity loans, commercial real estate loans, construction and development loans, and the alphabet soup of derivatives. My prediction is that there will be a full year-over-year decline in current dollar GDP from the end of 2008 to the end of 2009 for the first time since 1948-1949. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.